It's about that time of day again, folks. 7:35 Eastern Time here this morning, Monday through Friday, 7:30 a.m. We kick off the morning session here with our morning prep. We're looking at crude oil futures this morning, and we're going from the screen here in Los Angeles all the way to the floor on the NYMEX exchange in New York City. This is a very unique way to begin your day each morning, and we look forward to giving you guys this analysis each morning. I'm going to start with a top-down technical analysis approach. Again, my name is Joseph. I'm from School of Trade. I run a live trade room every morning with a whole group of members from all over the world, and we use charts to anticipate high percentage trades, and I'm going to be looking for them as early as 8 a.m. Eastern Time this morning. Between 8 o'clock and 10:30 in the morning, we can be very, very productive by using the London trading session, by using the overnight trading session, and by using a top-down approach. Once I'm done with my charts, I'm going to kick it all the way over across the country from Los Angeles over to Marty Errico. He's going to be talking about what he sees in the NYMEX exchange. He's got his feet on the ground, braving the elements in the NYMEX, and we're going to finish up today listening to what Marty's got to say and what he's seeing from the NYMEX floor. As always, we'll jump right into it here this morning with a technical approach. We're going to go top down here first, and I'm going to begin here today with a weekly chart. Now, this weekly chart really important because it's going to allow us to paint the picture about what's been going on leading up to this morning's price action. Now, I got to give you some disclosure on this. Remember, if you're following along at home, we're not going to be trading off a weekly chart, at least not us intraday traders. If you're trading intraday, in other words, if you're flat overnight, if we're not holding on to trades multiple days, we're probably not going to use the weekly chart for much more than just seeing what's led up to the point we're at right now. We can see right away here on the weekly chart this morning that we have come all the way off the highs of this price wedge, and we have now settled in at this, what would be support at 91.96, down to 90.68. We call this the trigger zone. The trigger zone is support, and ultimately the 90.68, the low of that trigger zone, is considered to be the line in the sand between this being just a pullback on the way going higher or this being a full-blown collapse or a reversal, right? So we know that 90.68 level is a pretty important number here for us to be considering this morning. Now, again, this is a weekly chart, so we're not going to look into this too much, but I want us to see that this initial chart tells me, well, we're bouncing off support. We got a green weekly candle. It looks a little bit bullish to me, but the weekly chart's not exactly it's not enough. Let's drill down a little bit further. Let's see if the daily chart has anything else to tell us. Now, remember, these weekly charts and daily charts are great at the beginning of the week, the middle of the week, the end of the week. So Monday, Wednesday, Friday, right? Think about ways in which you don't need to use this every day, but we're going to look at them in the early parts of the week. And you can see right now the daily chart shows us much of the same that the weekly chart showed us. We got that same trigger zone there. We've got the bounce off the 91.97, right? And now we're going higher. So again, this daily chart tells me, yeah, Joe, we look bullish here this morning. Now we're going to start getting into a little bit more of the meat and potatoes. Now we're going to start looking at, okay, what is this market really telling me as far as what can I trade today? Now that we know we're looking at bullish price action opening up this week, where can I trade this morning? Well, now the 4-hour chart. This 4-hour chart gives us a lot more clues. Now, our members right now are probably laughing at me saying, Joe, we don't need those dailies. We don't need those weeklies. We knew about this double top weeks ago, right? Well, maybe not weeks ago. That's on the 13th. So, yeah, weeks ago here, we knew about that double top. Now, that double top has been providing us with 2 levels of easy support. And you can see here we have tagged that support and bounced higher. So it's not fooling us at all here this morning on this crude oil 4-hour chart. We can easily see why this market has bounced. And of course, again, as a member of mine, we'll teach you all about double tops and how to use those as buying opportunities. We now expect to see crude oil attempt to retest that top again. But boy, not if those sellers can have any say in it. You can see here we have trigger zones. Now, I've used major swing highs and just the most recent swing low to factor in now these important price levels, 92.95 to 92.63. That appears to be the most important immediately this morning. And like a very wise trader once told me many years ago, Joe, remember there's only one level above you and only one level below you. So why are you getting all paranoid about all these levels, right? Why are you getting all overwhelmed by so much stuff on the chart? And boy, he was exactly correct. So I remind you guys to, rather than worrying about everything up top and everything down below, just look at what's available to you right now. What do we have above us? 92.95, 92.63. Okay. If you want to look even further, 94.14, 93.59. And we got 91.71 and 91.41. What does that tell us? That tells us those are the levels we're either going to be buying or selling at. Now, we never predict. We always react. So what I'm going to look for here this morning is I'm looking for this candlestick to close below 92.63, right? Get the wick of that candle back below 92.63, and we will then be looking for short signals on our entry time frames. We head on down to the lows. We bounce around the lows. Again, we're not going to predict. We're going to wait for price to rise up off these lows, and then again, looking in this case to buy pullbacks. Now, please remember, if we do close above this 92.95, we will consider this level to be broken. So a close above it, now it's removed, and now we're using the level above us. Remember, guys, the wicks do not cancel or do not disqualify a range like this. We've got to get a close above resistance. Got to get a close below support. What does this 4-hour chart tell us? This 4-hour chart tells me I'm looking for selling opportunities now at 92.63 or lower. It still leaves the door wide open for prices to keep pushing higher, right? This is only considered resistance, and resistance is nothing more than where we expect traders to react. It's not a guarantee, much different than a sell zone, right? If we were up top here at a sell zone, I would say, okay, we got to look for selling opportunities. This ain't no sell zone, though. This is just a pit stop on the way either higher to 94.14 or it'll collapse and come right back down in. We are going to wait patiently here. We've got about 15 minutes left in this candle. You can see about 15 minutes left in this 4-hour candle. So before we close up here at 8 o'clock Eastern time, we're going to figure out what to do next. That 4-hour chart gives me a lot of clues. Again, if we collapse here right now, I'm selling short. If we keep on going, I will probably have to wait to see what happens at 94.14. I will be looking to sell that as well. All right? Very difficult to buy up to that 94.14, but I will be looking, right, to sell it short at 94.14 to 93.59 as well. That's your 4-hour, guys. We get to drill down even further. My 240-minute chart tells me what to look for today, but I'm not satisfied yet. I think we can get a little bit closer here in a 60-minute chart. Let's double check here and see what a 60-minute chart has to tell us. A 60-minute chart now begins to tell us a little bit more specifics. And you'll notice we add in some trend lines on this 60-minute chart. You can see the price wedge that has formed here using these most recent trend lines. And there's a lot more detail here. We can still see there's quite a bit of resistance overhead. There's a few sell zones tucked in overhead. So this should really tell us here that if these buyers are going to keep pushing this price higher, boy, are they going to have a mess to deal with lots of resistance and 1, 2, 3 sell zones immediately overhead. Boy, this chart here, what does this tell us? It tells us that trying to buy here is going to be virtually impossible. It tells me that, Joe, rather than trying to break through this brick wall going long here, we might as well wait for price to collapse, and then once it starts to tumble, that's when we'll have those buyers beat. The sellers will regain control. The balance in the market will shift from bullish back to bearish. We'll be short in our trade room, and we'll be looking to take profit all the way back down 91.72. And depending on where this trend line is, this trend line will definitely have to be a profit target for us. It may end up being a partial profit target on the way down to 91.26. We'll have to wait and see what happens with what the market personality is telling us at that time. As you can see, trend lines have been added. Bearish channel has been added. I'll be sure to post all these charts here for you guys this morning, right on the blog this morning. But boy, there's a lot of reasons to be looking to sell short. That bearish channel, the trend line analysis overhead, and of course you've got trigger zones and sell zones starting literally right where we are at this time. 60-minute chart tells us I'm looking to sell. Let's drill down one more step here, one more step. I'm going to go all the way down now to a 5-minute chart. Now remember, the first thing we always look at on a 5-minute chart, I'm going to expand out a little bit further here in just a second. The first thing we always look at on a 5-minute chart is what's up with London. Now, I'm just a lonely old day trader trading the U.S. morning session. I live in Los Angeles. A little bit difficult for me to trade that London trading session. If you're in London, though, you'll be trading the Asian session, 7 p.m. last night until midnight. We're trading the U.S. session, so we're going to use the previous session to this. This is the London trading session. First thing that we see is, whoa, that's a wide range. Remember, we're always looking at the size of that range. Think about it. If this price action has been running since 3 o'clock in the morning, it's probably exhausted. It probably needs a Gatorade or a coconut water. I'm kidding with you, right? It's probably tired out. These markets can't go on forever. I know it's crude oil, so it can go on almost forever, right? But it won't be going on forever. We know if London is really wide like it is here, we know to expect this price reversal. We've gone almost, 180 ticks here since 3 a.m. That is very, very wide ranges for the London trading session. A wide trading range tells me two things. What is the trading range being wide tell me? It tells me two things. The first thing it tells me is expect a reversal. The second thing it tells me, though, is that we might just be very bullish, right? That's always a possibility. I'm not going to lie to you guys. Sometimes we see this market just keep on going, right? Wouldn't be the first time, and certainly won't be the last time that will happen. So the first thing we notice is this thing is very, very wide. So we're hot on the scent of a reversal. Now, remember, I can't be married to that position, so I will be aware that it could just turn right around and keep going higher here. Now, you'll notice we've marked up where we expect to see this price go higher, and it's going to be right here. I've got a swing low. I've got a swing high. That's giving me my trigger zone. That's where I'll expect price to pull back to before it keeps going higher. So we got plenty of room here to get short. This is telling me even more. Remember, the daily charts, the weekly charts, they told us to be buying. The 4-hour charts, the 60-minute charts told us, not so fast, Mr. Bull. We're looking at selling here now because we're running into resistance. We've got a big, big trading range. And so I'm going to look for price to start showing signs of collapse. You'll notice we're just closing that 5-minute candle right now. And wow, it slips right in and closes inside the reversal zone. Look out below, guys. I am using a short-term target of 92.28, 92.07, and a long-term target. That trend line is going to put me right about 91.50. I'm going to say 91.50. Now, don't quote me on that because we don't know when we're going to get down to that trend line, but use about plus 5 ticks off that trend line. I'm not going to put my target right at the trend line. I'll add about 5 to 7 ticks on that to make sure I grab it conservatively. So we are looking short here on the 5-minute, guys. I will be looking to sell retracements on the way down. I've also got levels well above me here. I've got plenty of previous highs of days above me, so if we do end up going higher, I've got the London reversal at 93.53. I've got reversals at 93.85, 94.20. You know me, guys. I would rather wait to see price get all the way up, and then right when I see those buyers slip and whoop, we got them and we bring it right back down. I would rather wait for that reversal up at the highs than try to predict when we're going to successfully break out to new higher highs again. All right, just my personal opinion, but I like those price reversals because you can feel that market going in balance, buyers being beaten by the sellers. Same thing is true to the downside. Now, again, it's going to be a lot easier to sell short here going lower. We've got to respect that 92.28 to 92.07. That will be a partial profit target. I will use the lows as a target, and I'll look to buy that reversal zone. If price keeps going lower, we know we've got reversal zones at 90.71, 90.29. 89.62. That's pretty much all I've got below me here this morning. I don't have a lot more below me. You can see a lot of wide open space down there. All right, so use those reversal levels at 71, 91.07, 90.71, 90.29, and 89.62. And once again, don't be a hero. We're not trying to guess or predict which one of these prices is going to break out. I'd rather wait to see the reversal, and then once we know we got those sellers beat, I'm buying it right back in. Bearish in the short term. We'll have to wait to see a little bit later on this morning. Got a brand new month, got a brand new week. Hope you guys had a great time here this morning so far. Hope you learned a little bit. And we're going to try to earn a little bit together with our members this morning in our live trade room. Marty, what are you seeing over there, my friend? Sorry to keep you waiting so long here on a Monday morning analysis. We're going to run all the way over to see Marty here and hear what he's talking about on the NYMEX exchange. Marty, take it from here, my friend.
All righty, thank you. Good morning, JJ. All righty, good morning, everybody. So I'm kind of on board with JJ's analysis. Now, last night we talked about the 91.80 level, right? We didn't quite breach that level in Friday's trading session. We only came 3 ticks from it. I know yesterday, Friday's pit session low 91.83, right? We only come 3 ticks from it, but that 91.80 is quite important. And if we break that level to the downside, I'm thinking we could see lower prices down to 90 bucks. The one local that I interviewed last night on the call, we spoke to him and we were asking him what he was thinking and what his positions were. And first, may I add, there was a large trade, 25,000 contracts of the 90 put was bought July, Augie, and SEP in the pit on Wednesday, Thursday, Friday. They worked, called working an order in the pit. When you have large customers that want to buy a lot, they're working the order in the pit Wednesday, Thursday, Friday. So finally now they finish. Well, they might have more. Who knows? I can't tell you. But I know 25,000 already traded. So they buy a large strike in the 90 put for this front month, July, Augie, SEP. So our trader that we interviewed yesterday, now he said the level was 91.50, and he said that he needs to see this level broken in the pit session for him to be convinced that we'll go lower, right? So we're not quite there. I would like to see a pit session open below 91.80, right? That's my level, 91.80. It's kind of JJ's level as well, as you can see, just off by a couple ticks or so. But 91.80, that general area is what we're thinking. Some of the pit guys are going to wait till they get down to 91.5, and then they want to start selling. Now, if we hit this level during pit session, that's key. We don't really care if it's hit in the overnight session because it's more relevant if it's hit in the pit session. So we're looking for it to hit in the pit session, 91.80, 91.50, just 2 simple levels. Now, what we're going to be looking at is going to see what kind of reaction we get. As we said, we're trying to trade the reaction of this break of this level. So if we do hit below that level, we do hit below the 91.80, we could see some sell-side activity. And then once we get down to $90, we can see those 90 puts come into play. And overall targets they're looking for, as JJ was just mentioning, 88 even, 86 even, 89 even, right? Those are some nice little targets to the downside. So we have to keep an eye on that. Now, right, say we keep on going higher this morning and we don't even open nowhere near these levels. We're going to be looking up at 94.10 for that line in the sand. Just as this 91.80 is the line in the sand for the downside, 94.10 is going to be the line in the sand for the upside. So you guys know what to do if we hit that level up there. But again, we're looking for downside activity here. So this morning, when I walk in here, I just have 5 more minutes. So let me just take a quick look across the board. I saw, as JJ was mentioning, Brent crude oil. It's trading up at 101.65. It had about a $2 trading range in the overnight session during London. Pretty big there. So did the crude, about $1.80 in range. Now, the thing is, we try to look for volatility to start getting offered out. Gamma is starting to get bid. That means we'll have the break-even range. That will be most likely telling us that we're going to come back down to the bottom to where we opened up last night, and that's called break-even for gamma scalpers. So we can see that come into play. Again, they like to tease that trade during the day in the pit, so we could see that possibly today. So watch for volatility to start coming off. Watch for gamma to start getting bid. We can see that happen. Again, it's called the break-even, right? So 92.68s are trading right now in the crude. I'm going to rock and roll through some levels and open interest for you guys this morning in just a minute. I just really want to take a quick look at the Brent WTI spread. It's up at $9, $9.10. Again, it's in backwardation by about 60 cents or so. That's very bearish. Again, in backwardation on the spreads. We're looking at the calendar spreads. They're also in backwardation. July to Augie, 16 cents. July to SEP, 24 cents. July to OC. Look at this one, guys, 59 cents. So we're looking at a inverse on all those spreads. The dollar, ladies and gentlemen, this morning here has been just trading a little bit lower. We're lower by about 20 cents or so on the dollar here on the DXC. We look just about 20 cents lower, 83.23 evens. Again, that dollar index has been somewhat of a tool to hedge, again, risk-on, risk-off sentiment. We've been watching the inverted correlation with the dollar, and it's been working since Wednesday. So ever since there's been more money coming into this market the last couple of days, we've been seeing that inverse correlation kind of working. Looking on the physical delivery front, guys, physical delivery, we already had about 12 million in physical delivery bought this month so far. Well, the physical delivery for last month's buying. Now the first week of the month, jet fuel buying, so let's be careful. Let's keep an eye on this. Again, I'm talking about usually an average of 20 million barrels that are bought throughout physical delivery throughout those last 2 weeks of the month. And so far we already had 12 million, so 8 million to go in physical delivery buying. They can be doing it at any time of the day, so I'll keep an eye on it on a day-to-day basis, but we already have a bulk of it already done as the cruise liners and airliners. They came in last week, but now the first week is jet fuel buying, so we'll be watching the physical delivery numbers. Let's talk some levels now. Alrighty, guys, crude currently trading at the 92.67 last print. We're up 70 cents in the Globex session. Again, as we await pit session open in just a little bit more than an hour here, I have open interest currently stands 286,704. Implied volatility sits at about 23% now. It just ticked up one vol. The vol index 2440 is where we closed out on Friday. That's the OVX. Now the vol index trades 2341, with your put to call ratio 1.358. Large stake in the 90 put. They even go down to the 84.5 put. So again, $90 put being bought very heavily. As I mentioned, over 25,000 of them traded to the weekly time frame. If you look on the daily time frame, it's still substantially high, like about 8,000 in the 90 put so per day. And this is all pretty much dealer activity. Again, a couple locals ride the coattail, but for the most part, we've been watching this relatively big paper activity. All right, guys, so on Friday we had a net change in the pit session of 60 cents lower. Today we have your pit session high from Friday, 93.20, the pit session low, 91.83. We close and sell the day here at 91.93. We had today every daily pivot at 92.32, which we're trading just above at the moment. Again, your pit session daily pivot here, 92.32. I got some support resistance above below, 92.81 resistance, 93.69 resistance, and 95.06 resistance. Support down below is going to be 94.44 as soon as we break below the 91.80 level, or yeah, as soon as we break below the 91.80. And out of yesterday's trading range, that first level, 91.44, which JJ had up on his chart, 90.95, which JJ also had, and 89.58. These are the levels that the pit traders will be watching, the pit session levels for today, June 3rd. Alrighty, guys, let's move on over to natural gas. Natural gas has been and continued to be just taking it on the chin lately here with builds in the Baker Hughes rig counts and also in our natural gas inventory numbers from last week. Again, like I mentioned, Baker Hughes rig counts were higher significantly, which is dragging us lower. So we've been watching the whole complex just take it on the chin recently here. With this natural gas, it's trading 398.40 right now. Again, I think we found some resistance at 393, 390 even we can use as some resistance, so I guess we found it last night. We're going to try to watch it in the pit session because that's the most important levels that we need to keep an eye on for. So natural gas could potentially reverse around as we have been and continue to be seeing this thing fall. So again, we're watching for a potential reversal. All right, guys, natural gas implied volatility 30%. Vol index 29.30. Okay, pit session high 406.40. Low 398.10. Closed and settle the day 398.40 on Friday. Today your daily pivot is 401 even, which we are trading just about 4 pennies below at the moment. Resistance above 403.90, 409.30, and 417.60. Support down below 395.60, 392.70, and 384.40. So that's going to be some really good support, those three major levels right there. And then obviously we can see a little bit of a bounce. Once we get above the $4 even level, I think then we can catch a bit of a bidding at least up to 405. So again, we had this huge run up in natural gas from the last couple weeks that I've been telling you guys about. And then all of a sudden, since probably Thursday on, we've been consistently falling since the inventory numbers. And like I mentioned here, Baker Hughes showed their rig counts with a build. But keep in mind, the supply-demand aspect of this market, besides just looking at the spreads as we do every single day and we look at the supply-demand differential, you also want to keep in mind that the weather's going to be changing, warmer than expected weather here in the northern part of the country, northeast part of the country. Eastern Seaboard. The only place where we're expecting just cooler temperatures is going to be the second by the plains. So other than that, the rest of the country is going to be experiencing just above average temperatures. As on the 6 to 10 day forecast, it's actually quite bearish, believe it or not, the 6 to 10 day forecast, as it's not really showing too much demand for natural gas. But on the extended 8 to 14 day forecast, you see a little bit of it warming up all around the country. It could create just a little bit of some cooling demand, and we could see a move in natural gas. So we'll be watching the charts. We'll be watching the weather markets, as this is going to be a variable in the market. And I'm going to wrap this one up, guys, as I'm going to throw it back over to JJ over in Los Angeles, because we're about done here, ladies and gentlemen. I'm going to see it in just about less than an hour here for the pit session opening bell here. I'm going to be with you guys live in just about 48 minutes, ladies and gentlemen. I'll see you then.
Great job, Marty. Thank you so much, as always, for being here with us. Don't forget to log in and listen to Marty and Marty, Jeffrey, and the rest of the Traders Audio team on the NYMEX floor. They do a great job every morning starting at 8:50 a.m. Eastern Time, and I find it to be very, very useful when it comes to combining it with my technical analysis from the charts that I'm looking at in my home office, and I think you will too. Just a quick note here, I'm watching that dollar index right now. Looks like that dollar is taking a nosedive here, and that's going to cause crude oil, euro, gold to react in a negative correlation. So we're watching this dollar a little bit more closely. Have not been able to get into that short trade yet. We're going to see if this dollar wants to collapse. This may blow these shorts right out the water here, so we're going to be keeping an eye here on a dollar index chart. You can see we got it falling pretty quickly here down to 83.155. So that will determine where we go next year on crude oil this morning. As always, thank you so much for coming in. Marty, thank you for being here today. Thank you to each and every one of you guys for listening in this morning. And don't forget to come out and see us next time, 7:30 a.m. We'll see you guys in 23 hours and 30 minutes. My name is JJ. I'm at schooloftrade.com. That was Marty at Traders Audio. We'll catch you guys here 23 hours and 30 minutes from now. Have a great evening, have a great morning. And don't forget, you got to learn it so you can earn it. We'll see you guys next time. Adios, amigos. Bye-bye for now.